When you woke up this morning, you were probably greeted with headlines like, Dow down 800 points, the world is ending. And your first reaction may have been to panic. But I hope that by watching this entire video, it changes your perspective on big red days that we have in the market and really teaches you how you can benefit from this. Okay, so answer me this. When you saw the Dow was down 800, 900, whatever points today, how did you react? Did you go out there, panic, fear set in, you sold some stock? Did you just continue holding, but that fear was still kind of lingering? You're wondering, oh, what's going to happen? I'm going to sell if we go any lower. Or were you on the side where you're like, hey, buying opportunity, I'm going to buy the dip here? Now, in this video, I want to discuss some important things in regards to this. First, we'll discuss what could be driving the market lower today. Why are stocks crashing? Then let's talk about what the outlook of the market looks like. Are we headed for another bigger crash like we did back in March? Finally, I'll share with you and actually let you know some stocks that I have personally been buying in the market over these last few days, including today. So if I could ask you to drop a like button down below, it helps the channel out a ton. And make sure you watch the entire video because like I said, it's going to be a valuable one. Also, if you're interested in viewing my entire portfolio, what stocks I hold in there, and get notified when I buy or sell new stocks, consider joining our VIP group, link description down below, and you'll also get access to a Discord chat with me and other investors as well. Now, if you checked any news source today or you looked at your portfolio, you probably noticed a bit of red that's in there. The interesting thing though, it wasn't these typical high-flying, highly volatile, highly speculative stocks that tend to see these kind of ups and downswings on a regular basis. It was actually different this time. Look at this list. MasterCard down over 5.5%. Shopify down nearly 5%. SAP, massive European tech giant, fairly stable company, not having a good week at all, down another 5% today. Airbus, this is one that's been struggling for a while, down another 5%. And then Google, the massive tech giant, down over 4.5%. Guys, even Pfizer, which is a relatively stable stock in the market, was down over 4% today. Funny enough, if you shift over and look at high growth names, many of them are also down 4 to 5%, but this is kind of a better day for them when you look at the broader picture because a lot of them have been selling off for the last week or two. So I'd say really from this perspective, high growth, not too much going on here. Tattooed Chef, Lemonade, Open Door, all these recent IPOs continue to sell off. And then we have names like Fastly, Lyft, Slack, relatively good companies, highly volatile, down around 4% today, continuing with their selling as well. So what's going on? What could be driving the market lower today? The first thing I noticed was that a fairly important company reported their earnings this morning, and I have a feeling that this earnings report spooked investors. MasterCard reported misses and declines on most fronts, and this kind of is a big deal. They missed on both EPS and on revenue, and not only that, revenue actually declined by 13.7% year over year. The reason this is such a big deal is because if you look at historically at MasterCard, they rarely ever miss on EPS or revenue, and in most cases, at least for the last few years, they have consistently beaten by a pretty good margin and continue to impress investors. So this time, not only did we miss on EPS or revenue, we missed on both, and we saw declines of double digits in revenue. That's pretty significant. MasterCard, Visa, American Express, these companies are seen as businesses that give us an outlook of how the economy is doing in general. So when MasterCard comes out, and they report earnings, they report a miss, not only does that tell us that consumers are not spending as much, clearly by the numbers, but also tells us that the recovery we were expecting may not be here as soon as we thought, and things may actually continue to get worse. Now, of course, this data in this earnings report is hindsight. Maybe this next quarter, we're going to holiday season, things pick back up, we had Prime Day, all this stuff, maybe spending was back up, but it's important to note that a double-digit decline in revenue pretty significant for a business like MasterCard. Now, couple all of this with, things that are going on in the market outside of this, stimulus, maybe that doesn't get passed. But of course, the biggest thing, elections next week, we have a volatile situation on our hands. So now this brings us to our second question. What does the outlook of the market look like? And are we headed for a bigger stock market crash? Now guys, this has always been the question asked by investors, no matter what. When we're at market highs Are we going to hit a stock market crash? A month later, we hit new highs. Are we going to hit a stock market crash? A month later, we just continue moving higher. When is the stock market going to crash? So-and-so reason is going to cause the next market crash, blah, blah, blah. It goes on and on. It's something you get used to as an investor. And this time is no different, except this time we have a few other factors that's driving fear out there. The honest answer to the question, are we going to see another stock market crash like we did in March, is I don't know. I don't know. Warren Buffett doesn't know. Kathy Wood at ARK Invest doesn't know. No one knows. All I do know is that right now we're kind of in the middle of a perfect storm. We have Q3 earnings, which, some companies like MasterCard, like we saw, SAP, big giants reporting numbers that investors are not happy with. Then we have the stimulus kind of being pushed out, so that's going to add a bit more fear. Are we going to get another stimulus check? I don't know if we will. Maybe we won't. Maybe we will. And then, of course, we have, the global issue, cases rising. That's something that's always been kind of in the back of our minds, and now it's kind of coming front and center. And then finally, like I said, the biggest thing, the elections are happening in about a week. Now, this is something that we typically do expect. Election years are typically volatile years, especially as we come close to election. And depending on the winner, certain industries are expected to thrive and certain industries are expected to get hurt. Pharma companies are expected to get hurt, your typical Johnson & Johnson, Pfizer, AbbVie. And this is because if the administration does change, they could be controlling prices on their products, and that's not going to be a good thing for their bottom lines. These are typically very stable companies. Johnson & Johnson, for example, one of the most stable stocks out there. Go take a look at the chart. It's pretty much an upward move with strong fundamentals backing it. So when you see a stock like this correct a few percent in a single day, you know that investors are spooked out not only about this specific stock, but the whole sector in general. So guys, all we can do really at these kind of situations that present itself is just be prepared, have a plan in place. If we see the stock market crashing lower, who knows, it may not. We should have cash on the sidelines ready to deploy into the markets. Having a strong cash balance coupled with a strong mindset and patience typically is a winning formula for any investor. Patience, I can't stress enough how important that is. And also combined with dollar cost averaging, buying inconsistently as the market goes lower. I can't speak for anyone else, but my experience using this sort of strategy has panned out very well for me. So now finally, let's quickly touch on what moves have I made in the market recently, including today. So over the last few days, I have been busy buying some stocks because I'm starting to see value in some great businesses, and I'm not going to miss my opportunity. Like I said, this does not mean I'm going to go in there, deploy all of my cash, and then just watch the market. No. I dollar cost average in. I see stocks going down, I throw a little money in. I see it go down a bit lower, throw a bit more money. It goes a bit lower, more money. And I just keep doing that on a regular basis until I've either built up a position that I'm happy with, or the stock starts reversing and moving to prices higher than what I'd be willing to pay. Now here's the part you're probably waiting for. I want to share with you some recent buys in stocks that I have personally made over the last few days. The first company is Beyond Meat. It's my high growth play, and I believe we're seeing a great opportunity here to buy in. It's pulling back on the overall market pulling back, fears maybe about restaurants closing once again, all that kind of stuff. But again, long term, I believe this is a big winner. Raytheon, this is another one getting hit left, right, and center because of Boeing issues and aerospace issues. So I continue to build this position at these suppressed levels. Remember, Raytheon is a strong fundamental business. They have tons of government contract, and they pay a nice dividend of a few percent. Finally, my most recent buy, which I actually did today, is Visa. This one is getting pulled down because of MasterCard, and I do believe long-term Visa is a winner and a cash flow machine. So I'm using these lower prices to build a position in Visa into one of the largest stocks in my personal portfolio. As long as Visa can stay under that $200 level or so, a little below that would be nicer, I would be happy adding into this position because I think the value seen at those prices are too hard to pass up. Now, of course, earnings could go either way for these companies. I believe Raytheon's already reported, Beyond Meat still hasn't, and Visa, we kind of got a glimpse here of what MasterCard reported. Visa's probably going to be similar. But guys, I'm a long-term investor. I don't care about, one earnings report where the stock is down, the business is hurting, all that kind of stuff. If I see these strong fundamentals over the long term and I see that these are businesses that, are struggling right now, but will recover and be better businesses over time. And these purchases are just the beginning, I'll tell you that much. I have cash ready to deploy, and if these prices continue on in the stock market and we go even lower, you bet that I'll be deploying a good amount of my cash and possibly get that cash position down into single-digit percentage points. I'm confident that over the long term, businesses like Visa, Raytheon, Beyond Meat, Johnson & Johnson, many of these large companies are gonna thrive regardless of administration changes, regardless of what the world is going through right now, because they have strong moats, they have a lot of cash, and they just continue providing a service or a product that consumers like you and I continue consuming. Guys, it's as simple as that, and I try to keep my investing as, high level as possible, still understand the business on a low level, but, don't overcomplicate things. I hope this video taught you something, and I hope you found value in this video. And if you did, all I ask, share this with a friend, because I'm sure a lot of people looking at the markets today, they're starting to panic, fear is starting to set in, and a video like this could definitely help them stay cool, calm, and collected and actually benefit from a situation like this. Either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.